Hello, and thank you for joining us at xm.com for this weekly Outlook video. I'm Cristina Marujos. Joining me today is investment analyst Marios Hadjikyriacos. We'll be having a look at the week ahead. And of course, I think the epicenter of attention is the G20 summit. We've been talking about this for weeks, where the U.S. and Chinese presidents are expected to finally meet and talk trade. So how do you see it playing out?
So you're right. The markets have been focusing on this meeting for a few weeks now. What happens at this meeting will probably determine the fate, or let's say future of risk sentiment, how risk sentiment evolves over the next weeks. So personally, I think that there are slightly more chances for the two leaders to reach a consensus and say that, okay, we'll go back to the negotiating table and we'll see how this plays out. I believe that is the case because both sides have an incentive to do so. They really want to protect their economies back home, and Trump clearly wants more talks. He recently called President Xi to initiate some sort of discussion. So I think that is a slightly more probable scenario, but it's close. It's what actually will happen is up in the air. Trump might finally decide to play hardball and keep making demands that Xi finds unreasonable, or on the other side of the spectrum, Xi might demand that the US softens its stance for China to return back to the negotiating table. So there are definitely multiple ways this can go wrong. Now, as for the market reaction, if they do go back to the negotiating table and they, the whole situation quiets down, we're likely to see stocks gain alongside the commodity currencies, so the Aussie, the Kiwi, perhaps even the Canadian dollar. On the opposite side, we might see the safe havens, the yen, the Swiss franc, gold, come off their recent highs. Now, if they don't reach any consensus, so if nothing comes out of this meeting, then the market starts preparing itself for more escalation. Perhaps Trump imposes more tariffs during the summer, so we are likely to see the opposite market reactions: lower stocks, lower commodity currencies, and stronger safe havens.
So for the time being, everything goes essentially. They're expected to meet tomorrow on Saturday, so remains to be seen. Now let's have a look at Australia. The Reserve Bank of Australia is meeting on Tuesday, and markets expect another rate cut. Do you think that's a possibility, and how will that affect the Aussie?
So that's definitely a possibility. It's already priced in by a 75% probability, which I find a little extreme considering that the Reserve Bank of Australia already cut rates at its previous meeting, and the incoming data from since that meeting haven't really been horrible. So there's no real pressure on the RBA to ease so aggressively. Nevertheless, the markets are convinced that will happen. Some recent comments from the governor made that a very strong possibility. Now, if they do cut, we're likely to see the Aussie move a little lower, but like I said, it's already the market's base case scenario, so any downside in the Aussie is unlikely to be, let's say, too severe. Instead, I think that the bigger driver for the Australian currency will be the G20 meeting and how the whole trade outlook evolves.
Well, apart from gold, oil also had a good week, but apparently it's entering a pivotal week with the OPEC meeting coming up. How do you think that meeting will affect the oil market?
Let me start by saying that I think that the G20 might be equally, if not more important than the OPEC meeting in driving oil in general. Now, as far as the OPEC meeting is concerned, the market seems more or less convinced that the producers will extend the current production cuts that they have in place for approximately 6 months until the end of the year. Now, for oil to advance from here, we would probably need to see the producers deliver something over and above what is currently expected. So an extension of the cuts for 1 year perhaps, or deeper production cuts, or a combination of these two. But like I mentioned at the beginning, I think that the demand outlook in the G20 might be the most important driver for oil in the coming week.
And finally, Maria, let's have a look at the U.S. It's another busy week regarding data out of the U.S. However, latest reports show essentially a slowing economy. So do you think we're closer to hearing the Fed announcing a rate cut?
Well, I think that a Fed rate cut in July is more or less a done deal. So the Fed has essentially boxed itself in for a rate cut in July. The real question facing the market is how deep will they cut? Will it be a typical 25 basis points cut, or will they try to shock the market and be more aggressive and cut the rates by 50 basis points? Now, to that end, we will have some crucial US data coming up in the next week. So the employment report for June alongside the ISM PMIs for June as well. So this will be some of the last pieces of data ahead of that meeting, so they will be crucial in shaping expectations around the Fed and for the dollar by extent. Now, what is likely to happen? I think that a 50 basis points cut is a little excessive at this point. Unless we see this data disappoint in a major way, the Fed is likely to cut by 25 basis by less than the market currently expects. So if we see some solid data in the coming weeks, that means that the market could price out some Fed easing expectations, and that could help the dollar recover a little bit in the near term. In the bigger picture, I don't think the outlook for the dollar is particularly bright, but we may see a recovery in the very near term.
All right. Thank you very much, Mario, for your insights. And thank you for watching us at xm.com.